What is going on, everybody? It's Stas here. Welcome back to another video. So it's Sunday. You guys know what that means, right? The weekend's wrapping up. We're getting ready for the work week. And in this case, for this video, we got to break down what's going to happen this week. I'm going to tell you exactly where the stock market's going to go. I'm going to tell you exactly what I'm buying, where I'm selling. Just kidding, guys. We can't predict the future, but we will be breaking down some stocks I'm looking at, my thoughts on the overall markets, and what I'm looking to do this week. But before we do that, make sure to get your free money from Moomoo. You get up to 5 free stocks, each of which could be valued up to $3,500. Just use that link down below or go to stassurfest.com/Moomoo. Deposit at least $100 and boom, you get your free money. And with that being said, let's dive into the video. So check this out, guys. We all know at this point the markets have been going up a ton. We don't have to talk about that too much in this video because we all know that. So there's no need to continue harping on that point. But what I do want to talk about, guys, is the sell-off that we've been getting the past couple of days, which you guys can see here. SPY in just the past 3 trading days has gone from 462 down to 449. In other words, it lost almost 3% value. Triple Q in that same time period went down from, let's say, 370 almost. Actually, no, 372 almost, and it went all the way down to about 358. So it lost about 3.5% value, just a little bit more than the S&P 500. And what I want to mention to you guys and what I want to make clear right now is neither of these, SPY or Triple Q, neither of them are breaking out yet or reversing the trend. We are still in a downtrend on the 5-day, 5-minute. I mean, just look, guys. Triple Q's making lower lows, lower highs. SPY's doing the same thing. So that's number one. You guys have to realize we are still well within a downtrend right now, and we got to start breaking out of, in my opinion, for SPY, 455, for this to even start to be a reversal, which you guys can see based on this trend line. That is where 455, 456 is. And for Triple Q, we got to break out of, at least in my opinion, guys. Let's take a look here. 364 to honestly 365 to about 367. That is where Triple Q should break, or it needs to break for this to start reversing. So I might as well put alerts. I'll do one is mark is at or above 360. Let's do 365 for this one on Triple Q. And for SPY, let's pull that back up. For SPY, I'm going to do one at 455. We'll just put it there for now, and we'll see, of course, how this week plays out. And as of now, the futures market is closed. I'm filming this at about 2:30 for whatever the futures market's even worth, guys. We all know it flip-flops all the time. One night it's green, then in the morning it's red. It's red one time, then it's green the next. So it flip-flops, but we're going to be watching the futures market. And if you're watching this video, well, I guess if you are watching this, it's past 6 p.m. on the East Coast when the futures market opens. Let me know what the futures are looking like. Drop me a comment and smash that like button if you haven't done so already. And now let's take a look at oil very quickly. Now that we just covered what I'm looking at very briefly for SPY and Triple Q this week, let's take a look at what oil is doing. You all can see it closed under $100 a barrel last week, which is not, I don't want to say it's the end of the world for oil, that the bull run's over, but it did close under 100 a barrel. Let me just close my Safari because ThinkOrSwim's moving extremely slow. There we go. I just closed that. Sorry, guys, for that. I don't know if you noticed, but this has been moving pretty slow, so we should be good now. So take a look. Like I said, crude oil went down about 1% on Friday. Well, I didn't say that, but I did say closed under $100 a barrel. And even though we did that, we are still technically in an uptrend here. Yes, we did see a lower high. We put in a lower high a couple of days ago. When was that? About a week, 10 days ago. We hit 118. We failed, dumped, and that was a lower high compared to the previous 130 high. So yes, that is not the best sign, but we're still holding a higher low. Take a look. Right now we're at 99.100 a barrel. The last really prominent low we made and we took off was at about 93 a barrel. So as long as we hold 99.100 a barrel on crude oil, in my opinion, the uptrend's intact, and we might be able to make a move higher from there. Take a look. If I clear the drawing set, we have again the uptrends continuing, and maybe this is even it's kind of in a wedge now that I'm looking at it. Right, we got the uptrend continuing. We're making lower highs as well, so we're digging ourselves in this wedge. We're gonna have to pick a direction, right? Crude oil is gonna have to pick. Is it gonna dump under 95, 90 a barrel? That would be obviously very good for the bears. we're probably going to get lower gas prices at that point? Or is crude oil, maybe when this inflation report comes out, is it going to rip above 105, 110 a barrel again? Then it might start breaking out towards all-time highs, or not all-time highs, but the recent highs. So that's kind of what I'm looking at for oil. And again, I'd love to know your thoughts. As always, drop me a comment down below. And let's get into these stocks now. We have a couple of stocks that I want to talk about, some of which are not the most sexy stocks. I'll be honest with you guys. They're quite boring, but the charts, some of these charts look good on the boring stocks. But who cares if a stock's boring, mainstream, this, that, unless you're trading momentum? Well, I mean, I guess there's a lot of different things you can do, obviously. If you want momentum, I mean, you want volume and you want maybe some hype behind it, like the Wall Street bet stocks, but not everything has to be like that. You can trade boring old companies that have nice setups and make money. I mean, at the end of the day, we're here to make money, guys. So the first one is GOLD. This is Barrick Gold. I've talked about this a lot on the channel. Not really recently, but I've talked about gold stocks probably more than the average finance YouTube channel. I mean, let's be honest, nobody really talks about this stuff, these particular stocks. And again, if the chart setup looks good, I'm all about it. So take a look. We all know gold's been very bullish. Gold's been going up like crazy. This thing's right around 1930 announced right now, gold is. And just about 2, 3, 4 months ago, it was at about 1780 an ounce, and we ran up all the way to almost 2100 with the whole Russia-Ukraine craziness, the fear around that, and obviously the invasion. We ended up running all the way to almost 21. Now we're down a bit. We're down about $150 an ounce, consolidating at around 1950, which I still believe this chart looks pretty bullish, in my opinion. I mean, I could be wrong. Gold could tank, but I think this could be setting up for a breakout, right? So at this point, going back to GOLD, which is a gold stock, it's not a gold ETF that tracks the price of gold. It's a gold mining company, right? This is setting up for a breakout as well. And I want to also talk about one that I called out a few weeks ago that ended up breaking out as well. And I think GOLD, I mean, I know GOLD is kind of lagging that one a bit. So I think the breakout is coming, in other words, right? So look, GOLD, we have clear resistance at $25.50, $26. We're making higher lows into that resistance, right? It's an ascending triangle, and we're also above the moving averages. So this looks very bullish. And if I pull back a bit, you all can see on the 3-year chart for GOLD, if it wants to friggin' load, there we go. We are right by the highs from May of 2021. And if this point breaks, which I mentioned before, and I'll say it again, there's going to be a huge move, in my opinion, towards the high 20s, maybe even low 30s. I think this gap will ultimately fill, and there could be upside of 10, 12, 15%, obviously, depending on when you get in. And of course, I'm not a financial advisor, guys. I'm not telling you what to buy. These are setups that I'm looking at that I like. You must always do your own due diligence. And let's quickly pop up that one that I called out a few weeks ago that ended up playing out beautifully. It's Newmont Corporation, ticker symbol NEM, another gold stock. It's a gold mining company. Look what happened, guys. Did I not mention, and drop me a comment if you all remember this, did I not mention, I was like, guys, if this breaks above 77, 78 bucks, we're going to be in uncharted territory. We're going to get to all-time highs, and who knows where it's going to go. Of course, we have gold, very bullish, fear, inflation, all that stuff is, good for gold, and of course, the companies that mine gold. So this ended up breaking out, and of course, all of the fear ended up shooting it up like crazy. And now, admittedly, we are a little bit overbought on Newmont, but I'm still watching it. And again, like I said, Barrick Gold is lagging Newmont, and I think it's going to end up doing pretty well. Since we called it out, Newmont went up about 10-12%, and Barrick Gold, I think it's going to break out. And like I said, there could be upwards of 15% upside. So keep your eyes on Barrick Gold and Newmont. Another one that I'm looking at here is Philip Morris. It's another one that's not sexy, guys, but I'm liking the setup slowly but surely on this 4-hour chart. What we're noticing here is Philip Morris went up about 3% on Friday. Very strong week last week for this stock. And the past 2-3 weeks, as the overall markets have been doing well, Philip Morris has been doing well as well. It's up about 10, almost 9.5%. So nice up move there for Philip Morris. So I'm looking at this. I'm looking at this 180 moving average on the 4-hour chart. I think we're going to have some resistance there. That's at about 99, $100 a share. And considering we're overbought on the RSI, we've ran up like crazy the past couple of days. And Friday alone, the stock went up 3%. Considering all those factors, I believe Philip Morris will see a cool-off period before we go up, run up to retest that 180 SMA, where we could potentially break on that second retest. So again, I think we're going to see a pullback. Then we might see a second run up for a second retest, and we'll see what ends up happening at that point. If this breaks out of $100, guys, if I zoom back to the 1-year chart and the 3-year chart, you all can see it's in a definitive uptrending channel. Very obvious. If we break $100, point blank period, this could run up to 110, $115 again, and that's about a 10, 12, 14%, 15% upside. And of course, they pay a nice dividend, and you might be able to catch a dividend payment or two while you hold it. And again, I'm not telling you guys what to do. I'm just telling you guys what I'm thinking, what's running through my head. So Barrick Gold, NEM, Philip Morris. Let's talk about Conagra Brands. Is it Conagra Brands or Food Brands? I forget. Let me take a look here. CAG is the ticker. Conagra Brands. There we go. This is one that's also ran up a ton. Look at the V-shaped recovery on this. It was $36 in the middle of February, and then it dropped all the way to $30 in the middle of March, and then it ran up all the way now to the mid-30s again. So it's up 13% in just the past couple of weeks. And this company, the reason why I'm talking about them is because they report earnings this week. Conagra reports earnings on the 7th, which is, I think, Wednesday. I don't know, guys. I might be messing the dates up there, but I think that's on Wednesday. And this is it's in an interesting spot. It's pretty overbought. I'll be the first to tell you that. Like I said, it's up 15% roughly over the past couple of weeks. And we're right by the 180 moving average, which, let's be honest with ourselves, this has been a sticking point for a couple of months. We have been above it for, certain time periods, but a lot of the time over the past couple of months, the stock's been trading under this moving average. So if we break out of, let's say, mid-30s, and by mid-30s, I mean right smack dab in the middle, $35, I'm going to put my alert right there. If we break out of there, maybe we make a move to 36. Maybe that resistance from, it was the resistance from the middle of March, or February rather, also from the middle towards the end of January. So watch out for that teeny tiny move. And honestly, I would like to see Conagra break out of 35, 36 in general. As you all can see, we are in an overall downtrend on the yearly chart and on the 3-year chart. Not really on the 3-year chart. We're more in a wedge on the 3-year chart. So on the yearly chart, going back to that, if we break 35, 36, there could be a push towards $40 over the coming weeks, months, especially if they do well with earnings. We got to see, guys, this is a very important time period for this company. So watch out for this one. Set your alerts. I'm going to put one at, I guess I just put one at 35, and I'm going to be watching it from there. So that's Conagra Brands, ticker symbol CAG. The next one here is Levi, ticker symbol LEVI, which is another one that it's not the sexiest company, and quite frankly, I don't really track them, and I'm not going to talk too in depth about the fundamentals, but the reason why I'm talking about them briefly here is because they also, like Conagra Brands, they report earnings this week. They report on the 6th, which that might be Wednesday, actually. I think the 6th is Wednesday. So yeah, Levi's on the 6th. What's the other one? Conagra's on the 7th. And Levi's chart, I'll be honest with you guys, it does not look good at all. It's downtrending. We just hit a low in the beginning towards the middle of March. We hit $17 a share, saw that little rally. We got rejected by the 180 moving average at about 21.50, and now we're back into the 19s. We are back under both moving averages. Not the best scenario whatsoever for this stock, but if it's able to break back over, I mean, I don't want to say it's a long shot, but the fact that, come on, guys, the fact that we double topped right by the 180 moving average, that is not good. That's not good at all. So for this to even start to move up again, we're going to have to start breaking $22 at least at minimum, and I would say more $23.50, $24. So I'm going to put 2 alerts on this, and for all I know, this it might not get hit for a couple of weeks. I might get this alert in a month or two. Who knows? But I'm going to put an alert at 24. Well, I'll do it at 24, and we'll watch what it does from there. If it starts cracking above 24, then we might be able to play it on a reversal. But right now, The trend is not your friend, and I'm not liking that. Another one I'm looking at is Union Pacific. UNP is the ticker symbol. This one, the trend is your friend. This looks pretty good. Look at this, guys. Union Pacific just hit a high of 278, I think on Friday or maybe on Thursday, and it went down about 5% on Friday, which I'm not sure if that is profit taking or if we had a negative catalyst. I kind of hope it's not a negative catalyst. It says here shares of rail, transportation, and freight companies are trading lower. Not seeing any sector specific news. Okay, there we go. That's a positive. The fact that there's no news coming out that's making the stock go down, that's a positive. That just means we might be getting rebalancing, profit taking, because this thing really did get pretty overbought. I mean, look, it went from 253 to 278 in just 14 or 20 days rather. It went up a lot, 10%. So it retraced. It came down 5%, which is great on no specific news, which is also great, like I said. And now we're right by the 180 moving average, and we also saw a bit of consolidation above that moving average in the latter half day on Friday, or the latter half of the day on Friday. And that's a good sign. So at this point, all we really need to see is UNP start breaking, cracking back over, I'd say 260, 261. And the selling, honestly, the selling might not be done. We might need another day or two of, little selling, maybe $1 or $2, $3, and then maybe some consolidation before this thing really starts taking off again. So don't just think tomorrow it's going to bottom and start bouncing. I mean, we're not saying that. I'm not saying that in this video, but could it take a day or two, 3, and then start to move and change direction back to the upside? I think that is more likely. So we're going to be watching UNP. I'll put an alert at $260 a share, and we'll see what it ends up doing from there. Guys, 2 more for this video. Hit the like button and subscribe if you haven't done so already. One of them is SGEN. This is CGen. This one up 3.3% on Friday, up about $5 a share. And what we're noticing here is a reversal. We're breaking out of the moving averages. We got a golden cross. Now this, what you're seeing here, let me zoom in on it. This is exactly what I want to see on the previous stock, Union Pacific, or not the previous stock, the one before that, Levi, right? I want to see Levi start to do that. Break out of the moving averages, get a golden cross, but we're not there yet. But again, for CGen, we are there. That's why I'm looking at it more heavily and I'm considering it more, because the trend is now becoming our friend. That's very important. If we take a look here on the 4-hour chart, we have an inverse head and shoulders, left shoulder right there. We got the head right here if it wants to work. There we go. And then we got the right shoulder. We have a bit of a lopsided inverse head and shoulder, but it is one nonetheless. So at this point, who knows where this can go? Obviously, we don't know the future, but the fact that it's reversing, we're getting the golden cross, and the right shoulder has a lot of runway, in my opinion. I think this could get towards 160 in the short term, whether that's this week, next week. And of course, we'll probably see some pullbacks within us getting towards 160, but that's where I think it's going to go. So keep your eyes on it, guys. It is SGEN. There's about 8-9% more upside from where we are right now, but if it pulls back a bit, of course, that increases the upside. That's if it does end up rebounding and going towards 160. So that is CGen. SGEN's the ticker. And the last one for this video, guys, it is good old O'Reilly Automotive. This stock got hit about 2.5% on Friday. Nothing crazy, and that shows, it goes to show, looking at this chart, $710 is a big resistance. We got hit there back in the end of 21, early 22, and we just got hit there last week multiple times. I think it looks like we got a double top last week at about 700, 710. And now that I'm looking at it, it looks like it went under both moving averages on Friday. It closed under both of them. So this is, I don't want to say it's extremely bearish. In fact, this is a sign that we're getting profit taking, it's cooling off, and it could be getting ready for the next round of or the next big move, right? Especially the more oversold it gets. Now that we close under these moving averages, if we start coming down, let's say another 10, 20 bucks, 30 bucks, maybe not 30, maybe 10, 20, maybe down to test the trend line here at about 640, 645, that would be a great opportunity in my opinion, because we would be even more oversold and more in need of a relief rally. Because like I always say, within a downtrend, which now we're under the moving averages, I guess technically we're a falling knife or in a short-term downtrend, we're going to see little relief rallies. So if we're able to catch one of those on O'Reilly, that's going to be a good opportunity in my opinion. So watch out for it. And of course, in the grand scheme of things here, we have an ascending triangle, which if we get oversold to the point where we're at the bottom of this trend line, we might be able to pick up a swing trade for this triangle to play out. We have to just see how it goes down, guys. So that's pretty much it. That's all I had for the video today. If you all enjoyed it, make sure to hit the like button, subscribe, drop me a comment, and if you want all my real-time buys, sells, call-outs, morning update videos, if you want to see what I'm doing every single day in the markets, option moves, day trades, swing trades, long-term buys, sells, literally everything I'm doing, guys, check out the Patreon down below or go to StockSurfest.com/Patreon to join, and make sure to get your free money for Moomoo. You get up to 5 free stocks, each of which could be valued up to $3,500. It's by far the best deal right now, guys, out there for all these new brokerages. So use that link down below, deposit at least $100, and boom, you get your free money. And with that being said, I'll catch you guys in the next video. Peace out.